Hey guys, I figured I'd show you some of these spreads that I've sold on Amazon that are starting to kind of come to fruition and start to go into the positive. Over the past few days, Amazon's been up and down. So as you can see, I've just been in there just selling spreads here and there. My favorite tactic just to make really solid income with options is to wait for a company that you love that's like S&P 100, S&P 500, like really solid companies to go negative and like significantly negative for the day. And if it's founded, like if it's an earnings release or, something that like, Jeff Bezos has another affair or like, there's a part of their business that's failing and it just came out, there's something like major that is actually like the negative, the dip is founded upon, then I wouldn't be doing this. But if it's just like a normal, everyday, just up and down kind of thing, well, if Amazon's negative like 2% or 2.5% or even 1.7% or 1.5%, then I'm in there and I go out to like a 5% probability in the money. So like if we go over to AMZN, and now they're probably on the increase just because of what's going on today. So there's not going to be many puts that, yeah, so like they're rallying like crazy. And that's why all these Amazon spreads that I sold are going positive. But, if it's in the negative, you're going to see all of these puts on the right hand side. You're going to see those going positive. They're going to look like this down here. And when there's lots of implied volatility going on up there, and just people are thinking, oh, doom and gloom, Amazon's going down, but there's really no reason for it to be going down, then most likely it's going to go back up, just in general from my experience. And if you're way out here and you see this column, probability and the money, that's saying like within, at the end of this expiration, September 20th, 2019, which is now only 2 days away. Most of these were like on Tuesday or Monday that I was selling them because there's still more premium at those times. As you get closer to premium, then these percentages start decreasing because everything starts to tighten up. You only have a few days left, and all the premium starts getting sucked out of these options that are way out here. But on Monday, Tuesday, Wednesday, you still have lots of premium to sell. And if it's just like a random dip, you can come in here and say, okay, there's a 5% probability that Amazon goes down to 1765, which is this strike right here. And then when you sell this vertical, it actually, for you to go negative, it actually needs to go even further beyond that, just a touch because of the math on that. So you're actually looking at like literally a 5%, right in the middle of those two, most likely. So 5% chance. So what that tells me is that there's a 95% chance that Amazon will not go down this low. And then if I go in here and I sell a vertical spread, I wouldn't do it now because these things are getting crushed right now because Amazon's going up. But if I wanted to sell a vertical, then 9 cents, and I have to tie up $240 to do that. Okay, so what I'm looking for there is about a 5 to 10% return. So if it was $240 that I needed to tie up, I'm looking for $12 to $24 net that I would make to do that. And so you have to do it at the right time to get those percentages. But what happens is like as soon as you go and do that when Amazon's going down, well, most likely one, you have a 95% chance that Amazon's not going to even go this low, even if it continues to go down. But most likely there's going to be some going up in that scenario, ups and downs with Amazon, right? And when it goes up, you're going to see this start to occur, which is these spreads, they start to go positive on you to where you've made money on them. So like check out this bottom one. I paid 30 cents for the spread. It's now only worth 6 cents. So as soon as it goes, I like to take things off the table early when possible, when the math adds up. So as soon as Amazon goes positive enough, these things will decrease and I can go ahead and pull my money out of them, knowing I could have made $30 total if I would have let that expire, minus the one commission when I bought it or when I initially sold it. But I don't care. Like that's what is the math on that? It's like 70% or something of the money, 80%. I don't know what it is, but anyways, that's enough. As long as as long as I've made about 50% or more out of that spread, and I think that the ride's kind of over for the day, then I like to pull my money out. So I'll just go in here and I'll just start buying back those spreads to close, and done deal. I just, I made 25 bucks minus the commission, which, yeah, that's like peanuts in the big scheme of things, but that stuff adds up for me. And that's how I make the majority of my money. And that's why I'm at 10% plus for the month. I'm coming up on $4,000 of profit in 18 days. Yeah, that's how I get those kind of percentages. So I'm going to stop the video. I only got 30 seconds. I'm going to sell a few of these verticals. Let me know if you have questions in the comments below. I'm happy to answer, guys. And make sure to subscribe. Thanks.